The PAT of the company in this quarter is at 69 CR, up by about 91%. The EPS in this quarter is at 6.45, which is almost double of last year. In the full year, I will say our revenue is at 1680 CR, which is about 75% higher on year-on-year basis. And EBITDA for the company is at 226.9 CR, which is almost about double of last year. The EBITDA margin is at 13% compared to 12.5% last year. Other income for this year is at 131 crore compared to 74.30 crore last year. The company has made in addition another OCI income of a net of tax at 28 CR during the year. The profit before tax is at about 334 CR, which is almost double of last year, and profit after tax is at 270 CR compared to 128 CR of last year. But if we add OCI income to it, the total profit will be at 298 crores. The EPS without considering OCI income is at 25.3 compared to 11.73 crores last year, which is 11.7 last year, which is almost 115% up. The cash or current investment value as cash and cash equivalent in our books continues to be at 1200 CR, which again means about 110 rupees per. And this treasury income out of this deployment of funds will continue to be a recurring income for the company. For the financial year 24, we have received a order intake of 7,000 crore, a all-time high in our history of the company. The unexecuted order book is at 9,200 crore already, and we are after March we are already placed L1 in business worth about 10,050 CR. We have won during the year 2 TBCB concessions, one at Gogamukh and another at Bokajan, which together means a revenue over the concession period entitlement of 2,800 CR, and the expected value of EPC works out of these two companies will be almost about 675 CR. Similarly, we are also placed L1 in Punjab for feeder metering, which is a high-end meter work. The total meter deployed is only 1.86 lakhs, but the order value is 661 CR, implying thereby that each meter is about 37 to 38,000 rupees. We hope to get more business, but putting conservatively that we should at least can expect 5,000 CR this year too out of the opportunities available in the market. But the pipeline is a lot more. We have announced a dividend of rupees 7 per share, which amounts to 350% on the face value of the share. Similarly, I will like to mention, as you all know, that we are likely to go for a QIP of 1250 CR. But mainly we will like to engage with large FII, FPIs and mutual funds for the issue. On the outlook side, I will say it is very bright. After a negligible or nil energy growth over almost continuously for last 8 years, the energy demand is back and is all-time high, and the demand growth is in double digit now. The present peak load demand in the grid is no less than 240 gigawatt and is expected to be 400 gigawatt by 2030. Thereby implying that as per the per capita consumption of power in India is growing phenomenally which is at present 1250 units per capita, is likely to be 1750 units by 2030. So we are catching up with the rest of the countries in the world. To meet this demand, obviously the power plant capacity has to be enhanced both in conventional energy by 80 gigawatt as approved by government, and also the energy transformation as happening of achieving a renewable power penetration of 500 gigawatt to the existing to our grid by 2030 is also on track. All this means that the sector is now transforming hugely, and it will necessitate deploying high-end solutions, high-end in scale and complexity, namely supercritical power plants, 765 kV, AIS, GIS transmission solutions, STATCOM solutions, VSC, HVDC solutions, backed by BESS or pumping storage solution facilities or gas-based facilities, where your company has a larger presence than any other entity in the marketplace, I will say. So I can call that that this means or implies a paradigm shift in the positioning of the company in this space. As you all know that your company is presently present in all the areas of the power sector. We can call 360-degree presence in all value chain of the power sector. Namely, we are part of the transmission solutions, high-end transmission solutions. We are part of the AQI solutions, namely FGD, air quality implementation solutions. We are present in the digitization of the distribution networks as well as smart metering deployment under RDSS scheme of the Government of India. We are also present in the hyperscale as well as in the edge data centers in the country going forward. So all these means use business, all these verticals are full of potentiality, and it is for the company now to take a larger lead and harness the opportunities. All these verticals are full of opportunities. Coming back to renewable power, I will say that CA has already given a report on transmission that to penetrate 500 gigawatt by 2030, a capex of almost about 2.4 trillion rupees will be required, and which means almost an addition of more than 4 lakh MVA transforming capacity and about 51,000 circuit kilometer of lines. And simultaneously with these investments, the inter-regional transfer power capacity will also get enhanced under ISTS mode to no less than 100 gigawatt by 2030. Thus, Power Grid sees a large addressable market, and our estimate is they have already announced a capex of 1.71 lakh crore up to 2030 and almost about 2.5 lakh crore by 2032. And we expect, and they have announced the revival of capex to 20,000 for the current year and 25,000 for the next year. So next 2 years, this is the target of Power Grid. This makes us optimistic pickup in Power Grid's capex, asset capitalization, which again means a sizable opportunity for Techno. I am happy to share with you that even today, just an hour back, we have placed L1 in a transmission concession at Ladakh for Nilgarh project, value about 170 CR. So all this means even in conventional thermal power plants where your company has been played a significant role in setting up no less than half the conventional power capacity in the country over last 4 decades. This also means a opportunity to us as a balance of plant or switchyards in the country. On the distribution side, under RDSS scheme, a lot is happening now. But apart from smart metering, a lot of digitization and of the networks is happening. We are already doing a digitization of the distribution network of DVC in their command area in Jharkhand and West Bengal. So these distribution networks in the coming days are going to become more smarter and intelligent, and obviously they can be remotely controlled, and consumer will stand served like a telecom. Apart from these, we will definitely need some sportive areas which will come in the future, like battery storage solutions or pumping storage solutions, and also I will say deployment of STATCOMs and HVDC solutions, and your company is qualified and competent to provide all these solutions in this space, because we have the presence in the power space only. The FGD segment is also, we see the momentum is back. We are finding a lot of traction from the SEBs now to set up FGD plants in their ongoing thermal power plants. Still, almost about 125 gigawatt is yet to be fitted with FGD, which mainly comprise of leftover works of CPSUs, but mainly of SEBs and private sector. And the total capex involved is no less than 1 lakh crore in this area. The TBC transmission segment, again, the TBCB bidding is happening strongly, and almost about 40,000 crore of bids are already in the bidding process, and we are supporting different bidders on the station side. We have already won transmission assets, transmission station work of 4,300 CR in the last year, and we are also won 2 TBCB orders as mentioned earlier with a revenue entitlement of 2,800 CR. Similarly, in metering segment, we are already doing 3 million meters for an order value of 3,500 crore in the states of J&K, Tripura, Jharkhand, and MP at Indore city. And we are also now L1 in Punjab to do again a high-end metering work of the feeders, which is only about 1.86 lakhs for almost a order value of 666 crores. So similarly, on data center side, I will say that we have recently won a concession from RailTel, where we'll be setting up 100 plus edge data centers on the very prominent all railway stations of the Indian Railways, and the digitization plan of the railway in partnership with RailTel. We anticipate this to be a very huge opportunity as to begin with as a value accretive and later on as a business. Similarly, in data center also we will say that a lot of scope is growing with every passing day, and we expect that almost the capacity of data center will be about no less than 1.5 gigawatt by 2025, and this is likely to be about 5 gigawatt by 2030, I will say. So which is a huge business potential. Again, we have been allotted land after in Kolkata to set up a data center next to the very data centers being set up by STT and Reliance, as well as Adani Connect, I would say. The market size in this, in terms of revenue, is likely to be no less than $5 billion by 2030 year on year. The growth drivers of data centers, you all know, is basically out of the cloud services, which have become a way of life, in efficiency and cost economy. Also, the policy of government on DPDP, data privatization, data localization, and so much of digitization, phenomenal digitization, which has happened in the country over last 4 years post-COVID. We are next to no other country in the world now in this space, whether they are DBT or payment vehicles or e-commerce or IoT or OTT or ISP services. Almost 800 million people are on ISP now, even in the rural areas. So all this means a lot. And additionally, this sector is also now hugely charged by AI, artificial intelligence, which means again, I see going forward gigawatt scale data, digital data centers happening in the country, just like transmission stations. Probably 10 years back, none could have visualized substations with a capacity of 10 gigawatt to 25 gigawatt each, which is becoming an order of the day now. So all this means use opportunities for your company. I will say that our data center is likely to be ready by September 25 in Chennai, and we see a lot of interest in this, and we have spent by now about 300 CR in this facility, I will say. Another good thing which have happened, that whatever assets we had created over the last 15 years now stands monetized successfully in last 4 to 5 years, and we possess no asset on hand today other than the data center under construction. Our all assets in renewable power, transmission assets under PPP model or under TBC mode all stands monetized. This has resulted in a strong balance sheet, very strong balance sheet with a cash surplus of 1,500 CR in the books of the company, and is available for next phase of growth and deployment for all these opportunities. Again, I will like to repeat that during the last year I had mentioned that morning has become, and this is only the first shine of the sun, which will keep brightening with every passing year. We are confident to achieve a revenue of 2,500 CR for the current year, and another similar growth to 3,500 CR for the next year or more. The EPS will be 35 for the current year and 50 plus for the next year, ending with March 2026. With this, I will now invite your participation, and anything you want to know more about us, you are welcome.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madhu Kela from MK Ventures. Please go ahead.
Guptaji, good afternoon. This is
your presence is very exciting.
Good afternoon, and thank you so much. And first of all, congratulations from my side. More importantly, holding the company together in most difficult times. I think you are one of the few people I know in the sector.
I request you to use the handset, please.
Hello?
Yes.
Yeah. I said you are one of the few people I know in the power sector who have generated real positive cash flow in such a troubled time in the last 20, 30 years of the sector. So, image of our company, Gupta ji, is generally that we are conservative. And my fear is not on the opportunity. My fear is more on the how well the company is prepared to capture this opportunity. And it will benefit a lot if you can, elaborate. You said that what we can achieve in the next 2 years. But if you can elaborate what the possibility and aspiration of the company is over the next 4, 5 years, I think that will serve a lot of purpose. According to me, this company has a potential to even do a 10,000 crore top line if we take a 5-year view. So would you concur with that? And are we even aspiring to achieve something like that?
But your question is very inspirational and soul-searching, I would say. Definitely in my lifetime I have been conservative, and I trust this has rewarded the company. And now the time is of growth. Keeping behind any of the challenges on, I will say, the geopolitics or of the very impact in the country, I fully agree with you that Techno can do 10,000 CR by 2030 without any doubts, and it is doubling year on year. This year it is almost double of last year, and next year again it will be no less than 70-80% of this year, and the growth will go on like this. I am very sure, sir, that we will be able to meet the expectation of the investor community, but we have to evolve.
Hello?
We have to evolve. Can you hear me, sir?
Yeah, I can hear you.
Yeah, thank you. Company has to evolve and transform itself, which we are doing it. We have set up an office in Delhi, and we are now doubling, or rather, I will say tripling the size of the office in Delhi, sir. It is a part of our own complex, where Tata are also our tenants in Gurgaon. We have taken a full floor on 6th floor of the building. It is under furnishing. Lot of people are under recruitment on the IT side, data center side, as well as on the transmission, smart metering. We are very focused on IT layered now power solutions, and we believe that is the future of power. And it is more rewarding than pure commodity solutions in power sector. So I can assure you that we will rise to achieve 10,000 by, if not 28, at least by 2030, sir.
Gupta ji, I have a few more questions. If you don't mind, I can carry on. One is that, we already have 1,500 crore rupees of cash. You said that we will raise 1,250 crore rupees by way of QIP. That makes it 2,750 crores. Plus the profit of over the next 3 years. Plus the monetization of the data center, which you had already alluded to. So this will be a lot of cash, roughly 5,000 crores or more, based on my, 360-degree calculation. So if you can elaborate as to where are we planning to use this cash, and knowing you, I'm sure you have never been in a capital intensive mode. So whenever we use this cash, how this cash will come back, and what kind of threshold IRR we are looking at while we are investing this cash.
Sir, you want to know my business secrets?
No, Gupta ji, that is important, for a shareholder like us. We only get this chance once in a quarter.
Thank you, sir. Yeah. Sir, what we see in the market of investments, that generally an investor always looks for phenomenal returns in India while deploying funds when project is in a build-up construction stage, deployment stage. They don't trust our type of firms to do jobs in time quality jobs in time, create sustainable value accretive assets. So all these challenges makes them expect 16-18% returns on whatever money they invest. My takeaway has always been that Techno is good in it. We have successfully done it. We have delivered more than 400 projects in the past. So there is no reason to have money from any of these investors while deploying the assets, whether it is smart meter, it is data centers, or even TBCB projects, or any other project of a large value we may like to take tomorrow in BESS or TSO or any other emerging solutions. You see. So my takeaway is that I must be sufficiently funded where I build these assets out of my own funds and then monetize when they are revenue accretive, not when they are in the capex mode. Once it is ready for OPEX solution, we are there with them. Then the investor is ready to be part of us at 10-12% also. So that delta of 5% I want my investors to earn along with us as a financial reward, which we have done. Like we created assets in transmission, renewable power in last 10-15 years worth about 4,000 CR. And we made a capital gain of no less than, I will say, about 750 CR in parting those assets, all at a gain, sir. If equity deployed was in those assets was almost about, say, 1,500 CR, we received 1.5x on those assets. So same strategy we want to deploy here. You make EPC margin while deploying the asset, and after that asset is revenue accretive, bring an investor and part of it, so that this 5,000 CR remains a criticality, a critical investment all the time in the company. Where going forward, we are able to sustain even any odd happening in the market. Many infra companies in last 10 years failed because a lot of counterparty, commitments were not kept by them. The biggest Ox means a company called ILFS, so used and still so big a failure in the market only because of the counterparty risk. So it is always a good idea that when you build these kinds of capex, you must have another amount in the pocket to sustain it for a year or more, even if anything goes wrong. So all these considerations are behind us, I will say, while building on it, a financial model like this, sir.
Sure. Gupta ji, my last question is, while financially we are prepared to really capture this opportunity, and I trust you, can you elaborate a little bit more on the manpower requirement? What kind of people will require to execute and make this company go to 10,000 crores in the next 4 or 5 years? And what are the real biggest challenges which could come in our way to achieve this objective?
Sir, I will only say that, sir, the challenge is always learning and remain ahead of learning as a requirement of the very solution. And that is why we always remained in a power vertical, not as an element, but as a 360-degree presence in this sector. We understand this sector as a very electricity act, very regulatory nuance, very nuance of the programs of the government of India and its achievements, and as well as our participation in this sector, that most large players in this sector today say that Techno can do what they are capable of doing. And also we are serving them additionally, I will say. But where we are differentiating over others is by going beyond power into power guzzling solutions like data. I believe society will depend on two things going forward, sir. One is a data and another is energy. Like if you read the statement of Tesla's chairman, he has only said I can create as many data centers catering AI solutions as possible, but I don't believe energy will be available. Pipeline to energy will be available. So this is where Techno wins over many others, that I can link solutions as well as provide energy to them, both. And India is globally competitive today in energy. The energy, if you look on Singapore, you look on Europe, you look on America, nowhere this energy today is less than 12 to 20 cents. Whereas in India, we can provide at 8 cents even today in these applications. So gradually, world will realize the importance of location as India trust more of our Indian capabilities, which all have served abroad successfully, but not in India on Indian soil. That is where we want to blend with them, sir. And all this knowledge has to be part of Techno. I will like Ankit to elaborate on this. We have already done many recruitments. Ankit will elaborate that. Ankit, are you there?
Yes, I'm here.
Yeah, can you elaborate how you are going about recruitment and expanding Delhi as a base?
Yeah, we over the last 6 months, we've made a target to start recruiting leadership team at different for different roles and responsibilities, and addressing it more on each vertical basis. So today we largely define Techno into 4 verticals. One being obviously the T&D, FGD, smart meter, and data centers. And we've come to realize that each vertical has to have its own leadership team and its own. Each has to be dealt as a business unit in itself, an SBU per se. And that's how those recruitments have already started. So as we speak, we have already taken on board Mr. James Stroud from US, who was the founder of Vantage Data Center, CoreSite, both the companies today being close to $15 billion each. And he was the founder who exited to Silver Lakes Capital. He was also the founder of the largest DC data center operator in the world today, which is Digital Realty. He was a founding member of that group. So he's on the board to guide us developing largely the marketing, sales, and operations team. And we started engaging with those teams in US. So we are trying to create a team in US itself to work closely with these hyperscalers like Amazon, Google, and others, where the design decisions take place. Execution may happen through APAC, India, but the larger design decisions happen over there, and we want to start influencing those. Similarly, we are starting to create a business unit. We are exploring to engage a business unit head for data centers, along with a very, very large sales team, for the reason that change the strategy. And going forward, we've engaged with, we are trying to bring a good finance and accounts team also for the entire group. So slowly,
Mr. Mishra, you can highlight on the renewable side.
Yeah, and on the renewable, we would also engage with Mr. Shailesh Mishra, who was Director Technical in Solar Energy Corporation of India. He's full-time with us now. And his guidance and his visions on what renewable energy or power sector will look like tomorrow, we have already started working on that. So yes, we are becoming a little more conscious on developing top management, and leadership roles are being defined, and we are aggressively looking for this year especially. We'll be concentrating on developing those teams. Especially for IT, we have picked up someone from a PSU who was heading who was the chief technology officer over there. We thought that PSU engagement would be the best because given Techno's relationship with customers also around PSUs and CPSUs, so that culture fit is good. We picked up someone from ENY again for heading our finance, accounts, and strategic planning and other things and audits. So she will also be joining very soon.
Sure. Thank you so much. Thank you so much, Gupta ji. Thank you so much, Ankit. Really, really appreciate giving you an opportunity. Wishing you all the very best. I wish that you create the most respected and the most valuable company out of this sector, considering the opportunity which is there in front of us over the next 4 or 5 years. All the best. Thank you very much.
Thank you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Venkat Subramaniam from Organic Capital. Please go ahead.
Guptaji, a lot of my questions have been answered. If you recall, over the last couple of calls, I've always been asking about, how we are going to empower ourselves with on the people side. So some of Ankit's answers are pretty useful. From whatever I can see, we have now clearly, transcended to be a technology provider than just be, a contractual obligation provider. Given this growth just now, are we getting paid sufficiently? In some of the segments, we probably should get much better margins. So are you seeing those opportunities? And if you do, in which areas are they?
Absolutely, Venkat. That's why I use the word, this is a paradigm shift for Techno now. That we are no more rubbing shoulders with the conventional players, limited to conventional solutions in all low end or mid end. All this sector is now having opportunities as I call it mediocracy to technocracy or high-end complex solutions, and definitely they have rewards in it. And we are definitely built for it. We definitely look forward to enhancing our rewards to more than 15% going forward over next 2-3 years. And even what Madhuji had asked, I will say the IRR looked upon by us will not be less than 18 to 20% on all these investments put together.
That's lovely to hear. We have always known you to be, ultra conservative, and I've never seen you this excited. We can now clearly see very, very exciting times coming ahead. Best wishes, Guptaji. Looking forward.
For 8 years, this sector has only suffered. What could we have done better? Anybody going aggressively in those times would have burnt himself, I can assure you. So today is the time to benefit now. We have cash, we have strong balance sheet, we have good credentials, and we have good knowledge to encash going forward opportunities. I can assure you, Venkat, tomorrow is the day for us.
We can see it, sir. All the best.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, hi. Hi, sir. Congratulations on a good set of numbers, sir. So a few questions from my side. First is, what is the current order book and L1 position? And can you break up the order book into generation, transmission, distribution, data center?
Yeah, no issue, sir. We have total order book of about 9,200 CR as of now, unexecuted, and we are almost 1,050 CR in L1 position as of now. Not March, as of now, I would like to use. Out of this, I will say that about 5,000 is in transmission, which includes about TBCB transmission assets of power grid about 3,000 CR, and TBCB won by private players and Techno is about 1,500 CR put together. FGD is about 1,300 CR with us. That is a power plant generation side. In distribution, without smart meter, I would say that we have business worth about 350 CR now. Not 350, about 400 CR you can say, including Tripura. And then smart meter, we have worth about 3,500 CR already with us. And data center, of course. We are not able to place a value on this concept of edge data center. It can be total game changer for the company going forward. but I can say minimum over next 4 years, it will be at least 1,000 CR, even if I take 10 CR per location in under railway stations.
Sir, is it right to say that we have won around 100 data center, 100 edge data center, and you are saying that 10 crore per data center, right? That's how you're arriving at 1,000.
Yeah, absolutely. We have a partnership with Railtel on a concession of 20-year basis, and we will be deploying in all prominent places the data centers for that.
Understood, sir. My second question is the order inflow. So you gave a target of 5,000 crore. And if you look at all the underlying businesses, I think, be it FGD, be it data center, be it smart meter, or be it transmission, I think the opportunity size will only ramp up compared to last year, isn't it? Especially given the fact that Power Grid has done at least C2 and REC and PSC has done 47,000 crore worth of bidding last year.
Absolutely right, sir. It is always more gratifying or satisfying. You say 5,000, achieve 8,000, rather than other way around, sir. So, and we will like to pick and choose going forward now. That is our aim. Risk reward must be evaluated very properly, which we have done, and we should be able to do a contract in time. So all these factors we will keep in mind, sir. But you have a point. The opportunities are a lot bigger than what a number I have given you. Hopefully, I will beat my own number, sir, and I am here to do that.
My last question, sir. Do you intend to keep bidding for TBCB assets on our own balance sheet, or is that the two which you won is enough for now?
Can you repeat your question, sir?
Do you intend to keep bidding for new TBCB assets on our own balance sheet?
Yeah, we are doing it, sir. Absolutely.
You want to, sir. Last year you want to, but you want to do more given that TBC pipeline is humongous this year, right?
Sir, but we don't want to aim at each concession capex of more than 500, 600 CR. On an average, we want to be in a low capex solutions so that the IRR available to us is larger than what is available in competition to giants like Power Grid and Adani or others. So we want to be in a safe haven.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Abhishek from Naredi Investments. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, my first question, what is CapEx plan for our entire company and especially for smart meter and transmission segment for next 2 years?
Sir, already I have stated it will be in total you can take almost about 5,000 CR for 2 years. 2,500 CR each year.
Okay. And second question regarding smart meter, it is perfectly cash consuming business because a smart meter delivered today and you received money in 93 months. Can you rethink this business model because it is a heavily cash consumed business?
You see, there is a period to deploy meters. All meters are not to be deployed on the zero date, sir. What the system is that you have to deploy it in 27 months, and the first lot of 5% must be achieved at the first 6 months. Thereafter, 5% every. That is the model, sir. So from 7th month itself, you have PM can start. Not everything happens after 27 months. So you have a progressive completion, progressive revenue accretion. Some disturbance in the system, man. Yeah, can you hear me now, sir?
Yes.
Yeah, some disturbance was coming in the system. Yeah. So in smart meter also there is a revenue accretion from 7th to 27th month also. All is not happening after close of the scheme. That is a beauty part of it, number one. And number two, you see, if we like in between, we can always discount or securitize our bills with REC PFC under the very scheme. And they are very eager to build up their books if we like, post revenue accretion. What I have said is that the capex we want to do out of our books, but once a meter or a lot of meter is ready for OPEX, we can always monetize it. Partially also, progressively also, and completely also as a SPV. So all those choices are on our table.
So going forward, we bid 2 million smart meters for annual.
No, sir, monthly. We have a DDF. There is a DDF facility. They call it direct debit facility in the program, sir. That is the agreement with the banker itself of the utility. Banker is a party to it. He is supposed to debit the utility account which is collected month on month from the consumers. So he has to debit my payout first as an obligation. So the mechanism is healthy, and we hope that there is no abuse to it.
Okay. And sir, last question: how much capex? So much capex you are planning. So why you give such a handsome dividend? You must keep the money for long growth of the company.
Sir, we have been always rewarding our investors and still keeping a fiscal discipline. We are totally a debt-free company. We ourselves have a cash of 1,500 CR. So paying a dividend, I think my investor deserves a dividend payout of at least as a dividend payout policy of the company, which is 25% of the bottom line. So we are honoring the dividend policy of the company.
That is good, but one side you pay dividend and other side you raise money from QIP. It is good.
It is good for the investor, sir. QIP gives you the value accretion to the stock, and dividend gives you the cash. I think every investor looks for that, sir.
Thank you, Abhishek. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Good afternoon, sir. Thanks for the opportunity and congratulations for the great set of numbers. So you talked about 5,000 crore the capex for next 2 years. So if you can bifurcate where this amount will be utilized for which segment?
Sir, at the moment you can take it about 25% into data center and 25% into your TBCB, another 50% into smart metering.
Okay. And sir, any timeline by which you want to raise the QIP so that we can able to utilize the fund?
By September, sir.
Sorry, sir?
We'll complete it by September of this year.
Okay. And sir, you in the initial commentary, you mentioned that we have also L1 in the Punjab smart meter, and the cost of the smart meter is almost 35 to 37,000. So any reason why such a high amount for that project particularly?
Sir, that is the type of metering required in the feeders. Feeder metering is very different than consumer metering, sir. There are multiple applications of the meters, whether it is a DT meter, it is a 3-phase meter, single-phase meter, feeder meter. So all meters are not priced equally, sir. They are of different purposes.
Okay, understood, sir. Thank you so much, sir.
Thank you. The next question is from the line of Chinmay Kabra from Emkay Global Financial Services. Please go ahead.
Yeah, hi sir. Am I audible?
Yeah, you are very audible, sir.
Congratulations on a good set of numbers. Sir, I just wanted, I had a request if you could just repeat the guidance that you had initially given for FY25 and 26.
24-25, our top line will be 2,500 and 35 rupees, sir. That was the guidance we gave. And for 26, 3,500 plus as a top line and a EPS of no less than 50 rupees.
And if I'm not wrong, the guidance for margins is what is the guidance for margins, sir? If you could just...
We continue to maintain at 13%, sir.
All right, sir. Yeah, those are my questions. Thank you.
Thank you. The next question is from the line of Shreyash Gathani from SG Securities. Please go ahead.
Good afternoon, sir. My question was actually on the data center side. So we've invested 300 crores of the 1,200 crores that we've intend to. So just wanted to know I know that the capex is going to be back-ended mainly, but trying to understand what is the status of the project since we've seen delays. Has there been any redesigning or anything as such? And my next question was on the partner that you're looking at. What is the status on that? Because since the last 6 to 9 months, we've been guiding that, we are working with a few partners for the project.
Yeah, sure. Basically, the total project is 1,200 when all 40 megawatt or 24 megawatt of IT is completed. At the moment, we are doing phase 1 only of 6 megawatt. The capex for 6 megawatt is almost about 450 CR, out of which we have spent 300 CR plus. And this will be now in a last leg of the work going on, more on electromechanical side and instrumentation side, which should be completed by September end. Yes, there has been a bit of a delay because of the delay in civil works, largely because last time there was a weather and cyclonic impact in Chennai, and the labor was almost missing for 2 months. And a lot of water logging happened in the city, not to our project. So all that has impacted a bit, but of course, redesigning also is an ongoing exercise as our new directors are guiding us, who are more hands-on than our consultants deployed initially. So all put together, I will say that it has been worth the time spent on the asset. Still, we are able to make it ready within 2 years from the date of taking up the project.
Got it. That is very helpful to know. So the first phase, you're looking at operating